I have a lot of information to cover in a very short amount of time. We got about 45 minutes together, and so I definitely got to make the most of that limited time that we have. But I am going to be focusing in specifically on the Forex market, the foreign currency market. As Reed said, I did actually, Forex market was the first market that I learned, and then I had a huge interest in trading the options market, and so curiosity sprung. Learned about that market as well, but I personally absolutely just love the Forex market because of what it really allows you to do. Now, what I'm going to do is go ahead and pull up my my PowerPoint real quick, and as we move along, to give you the good old disclaimer here that trading does have its own form of risk involved, so you should never invest money that you cannot afford to lose, and you always want to trade with equity management in mind. There is no such thing as an undefeated season, and you may incur losses from time to time, but the key is to keep your profits high and have minimal losses. And once again, we'll talk a little bit about that as we move along. Now, Reed obviously already gave an introduction. I appreciate that, my friend. I did go to University of Central Florida. I got accepted into several law schools. My choice was University of Miami. And I got to a point in my life where I was in my 20s where I just wanted something more. I was making just enough to pay my bills and barely get by, and that's kind of the frustration point that I had hit in my 20s, which kind of led me to wanting something more. Long story short, I started learning the market. So the company that Reed actually mentioned is MTI, Market Traders Institute, and I just want to quickly kind of let you know within a minute or so kind of who they are. And they are based out of Orlando, Florida. As a matter of fact, what's pretty awesome is that, excuse me, the picture on the bottom right, that is our brand new world headquarters, about 10 minutes from all the major theme parks, Disney, and if you're familiar with Florida, of course, but we actually just got done transitioning into that move. So as of Monday, everybody will be in the new location, which is pretty cool. But we've been around for 22 years. Last month marked our 22-year anniversary. We have over 30,000 students. And the one thing that I really want you to take a look at is where it says 103%. Okay, I'm not sure if you guys are aware of this, but the average Forex trader, okay, claims they're only about 33% profitable. All right, and that's fairly dismal if you ask me. I didn't make this up. This is from data collected every single quarters by brokers via a survey. Well, we did the same thing here at MTI, except for all of our students, and the difference is very, very clear. MTI students were 103% more profitable than the average trader out there. Now, we're obviously here because I'm going to talk to you about strategy, right? We're going to talk about strategy. I want to talk to you about market movements, market conditions, and really what I want to do is personally talk about a strategy that has literally allowed one of my coaches, a gentleman by the name of Joshua Martinez, to really see some pretty incredible things. And all of us, at the end of the day, what do we all want, right? We all want our account to spike. Is that safe to say? How many of you agree that you want to get to that tipping point, no matter what market you trade? Whether it's, my gosh, if it's Forex, great. If it's not, if it's stocks, if it's options, if it's, futures, whatever you personally have a preference in, everybody wants to get to the point where they want their account to spike, right? And so let's call it a tipping point. Now, the one thing that I personally love about the Forex market, the reason I was introduced to it so, early on is because of its capabilities and what it allows the average individual to do. The average, I like, the term that people coined, average Joe or whatever. Well, the average Joe can trade the market, all right? I was the average Joe. I was, college student, broke, getting by on ramen noodles every single night. I'm sure, if any of you were in college at one point, you can maybe relate with that. But the Forex market is the largest financial market with almost limitless amounts of liquidity, which really means that it's a market of limitless financial opportunity. Now, I will go ahead and let you know that there's 4 things, in my opinion, that make this market so incredible, and I want to talk about these before I pull up the charts. The first thing is liquidity. It is the most liquid market, which basically means that you can enter and exit whenever you want. There's always buyers and there's always sellers. Number 2 is flexibility. It is the most flexible market because it is open 24 hours a day, 5.5 days a week. If you have a crazy, like me, I had a crazy schedule. I was always traveling and surfing and, so important, right? I was always just traveling and, in school and studying and work, and it was just pretty chaotic, right? And so I basically was able to figure out what times work best for me, but, right, when people say I don't have time, that doesn't really kind of come into play with the fact that it's open 24 hours a day. Number 3 is size. It's the largest market. There's over $5 trillion traded daily on the Forex market. And then finally, focus. This market allows you to focus, all right? There's approximately 60 currency pairs you can trade. I do not trade 60 currency pairs. We basically teach you which top 6 to 7 to focus on and how to take advantage of them. Now, I personally want to just introduce you to the gentleman that I mentioned earlier on. His name is Josh. And the reason I want to just quickly mention Josh to you is because, you know, he's obviously got a, you know, he has a plethora of just, I mean, my gosh, he's so reputable in this market. He's such an incredible trader. He's so successful and sought after by people from all over the globe. And I'm not going to go through all of his credentials, but what I will tell you is that he turned an initial deposit investment of $500 and generated over $39,000 of profit. Now, as I go through this, because I'm ready to pull up my charts personally, but I'm not going to kind of get into all the details here, but what you will notice is that this is an actual, you know, snapshot, all right, of his trading account when he opened it up in 2011 with just 500 US dollars. You obviously notice that he was making money, losing money, making money, losing money, and clearly you can see the amount open, right, 500 bucks, and then it's all fluctuating within a couple dollars. Now, if we fast forward and we kind of just go through it, do you notice how within a year or two he went from $3, $0, $2, $3 to now 4,000, 2,000, you know, 3,000. And so that's the beauty about this, folks, is that when it comes to actually withdrawing money and getting to that point, this is the tipping point that I was referring to. So if you look at the bottom right of the screen, that is the picture of the graph. And so that's the beautiful thing. And Doug is saying, how long is the average trade? Doug, that is a very, very difficult question. You know, any presenter, okay, any analyst, trader that's going to be on today will likely tell you that that is a very difficult question to answer as far as how long is the average trade. I'm not saying it's a bad question, okay? There's no such, you know, there's no such thing as a bad question when you're learning about the market and you don't really know much about it, but I will tell you, and you may be very, very familiar with the market, by the way, okay, but maybe just not with Forex, but I will tell you that regarding the Forex market, it really just depends on what strategy you trade. Does that make sense? You know, so once again, so I hope that kind of answers your question in a nutshell. It just depends. Some trades you're going to get in and out within 15 minutes. Others, you may hold your position for, you know, a couple days, you know. So, but what I want to do right now is personally talk about a strategy that's really been able to assist Josh and myself in finding our tipping points. This is the first strategy that I personally ever learned that I literally kind of sat back and felt awesome, you know. How many of you, type in a Y for yes if you've ever had that moment where you learn your first strategy? Like, a lot of you know what I'm talking about. You learn your very first strategy ever, and you just kind of apply it, and it works. And you just kind of like, you're on top of the world. You know what I mean? You're like, God, I am awesome, you know? I'm so good. I'm such a professional. And you're like, oh, my gosh, I have so much to learn, right? But you know, this is the strategy, and so I love to talk about it. But what you will notice is that, you know, these are all pound crosses. All right, you notice that we have the pound Aussie, pound New Zealand, we have the pound Canadian, pound Japanese yen, pound Swiss franc, and the pound US. Now, these right here, folks, a lot of you are going to ask me, can you apply this specific strategy, you know, to any currency? And I'm going to tell you, no. Okay, I mean, if you want to, you can go for it, right? Give it a shot. But there's a reason why we trade what we trade right now with the pound, and I'm not going to spend an hour telling you why, but I will tell you that it has to do with the banks, the time frames, and why we see what we see at the time that we see it, okay? So what I'm going to do is I'm just going to simply pull up, let's just go with the pound New Zealand, okay? Pound New Zealand, first thing you'll notice is that we have a lot of market movement, right? So what you have to understand, folks, is that the market is going to move, all right, in a wave-like pattern where the market's going to form highs, the market's going to form lows, the market's going to form highs and lows, and it's going to do this over and over and over again, right? How many of you agree with me? Our goal as an investor is to be able to look at this move, okay, and properly anticipate which direction do we believe the market's going to head into next, right? Now, what you also want to notice is that every single currency pair that I have up on here, all right, every single one that you see, these are all, by the way, on a 1 hour time frame, all right? And you're going to really be able to understand the strategy and see what I'm referring to, especially on the 1 hour time frame. Now, these dark blue and white looking rectangular shapes on the screen, these are simply known as Japanese candlesticks. They are nothing more than a visual representation of how much the market has moved in whatever time frame you select. And the number one thing that you're trying to accomplish in this market, okay, if you're taking notes, I want you to write this down. In the Forex market, your number one goal is to capture pips. All right. PIP is an acronym. It simply stands for price, interest, point. Now, next thing I want to do is I want to just go ahead and explain the strategy to you, and then we will go ahead and apply it and show you what we're doing and how we're doing it. All right. Now, the very first thing that I want you to understand is the market is going to provide. All right. The market's going to provide you with what we call a high and or a low. It's typically going to provide you two main, high or lows of the day, and I'm just going to simply draw this out for you, and then, like I said, we're going to go ahead and apply it. But let me just draw it like that. So if you're taking notes, I want you to write this down. We have a high, low, and then over here we have a high/low. Now, the first high or low of the day, that is going to form anywhere between the hours of 2 a.m. Eastern Time and 5 a.m. And let me just go ahead and type that out for you. 2 a.m. and 5 a.m. Eastern Time. The second high or low of the day, we can expect to form anywhere between the hours of 8 a.m. Eastern Time and 2 Eastern Time, right? Now, type in a Y for yes if you agree with me that the first high or low of the day is going to be much, much easier to find within a 3-hour gap than the second high or low of the day within a 6-hour gap, right? How many of you agree, or at least how many of you have noticed that the market has the most fluctuation or volatility, if you will, very, very early on in the morning? I mean, it really depends, but for the most part, especially with the pound, you really, really begin to see some very incredible, some serious movement within these times, and there's good reasoning behind it. Now, the candle that we're going to be focusing on is going to be the 3 a.m. candle. Some of you might be going, oh my gosh, 3 a.m., forget it, I'm not waking up for this, right? But I will tell you, how many of you would wake up, honestly, especially with what I'm going to show you, how many of you would wake up at 3 a.m. if you were able to set yourself up within minutes, go back to bed, and then you could potentially wake up making some pretty serious cash? How many of you would honestly sacrifice a few minutes, right, if you were able to do that? And I'm going to show you what I'm talking about. Now, the next thing I want to talk about, all right, is the market is going to provide you with what we call, I'm not going to abbreviate it, I'm just going to type it out, all right, average daily trading range. So every single day we can expect the market to provide you with a certain amount of pips, if you will, so it's called the average daily trading range. Now, with that being said, from what we see, typically you can expect the market to move anywhere within 50 pips and 200 pips. And once again, that's going to depend on market fluctuation, market conditions, but that's typically what you're going to be able to see. Now, with the strategy that we're going to be getting into, which I'm going to be actually, somebody, I forgot who, but somebody called it out, I think it was Anthony. Yeah, it is going to be actually referred to as the London Breakout. Now, we're going to be going after a minimum of 50 pips for every trade that we place, so we could be going after more, but we will not be going after less. Does that make sense? At a minimum, we're going to be going after 50 pips. Next thing, how much money can you make? Well, in this market, all right, in the Forex market, there are 3 major lot sizes traded, in Forex market. Now, depending on your investment, that will in fact determine what your ROI will be. So let's talk about the very basic smallest lot size, which is known as a micro lot. A micro lot is a $20 investment, and 1 pip is worth 10 cents. The second lot size available to you, this is known as a mini lot. A mini lot is a $200 investment, and 1 pip is worth $1. All right. And then finally, we have the last and largest lot size. This is known as a standard lot. This is a $2,000 investment. 1 pip is worth $10. Now, we trade with something known as leverage. Leverage simply means buying power. Leverage is great. A lot of you know what it is. Some of you maybe don't. But because leverage equals buying power, I will tell you that that is what we get to use to our advantage. Anybody can get the leverage. You don't need to loan it from the bank. You don't need to have good credit. It's how brokers operate, and we get to take advantage of it. Now, the one thing I also like about the Forex, folks, is that your risk is also defined up front. So you can have some upfront defined risk if you choose. And what I'm going to be doing is I'm going to be using a standard lot as the sake of the example as we move along. So do me a favor. I know I'm talking fast. I apologize, but I'm trying to make the most of the 45 minutes that I got. So type in a Y for yes if you're with me so far. Is everybody good? All right, can I move on? Let me just give you some takeaways. We're going to be focusing on the first high or low of the day. okay, which between 2 and 5, we're going to be focusing on the 3 a.m. candle. We're going to be going after a minimum of 50 pips. Could be more, but it won't be less. And I'm going to be using a standard lot as the example. Okay, everybody cool? I'm going to go ahead and delete this. Let me just clean this all up. I am going to grab a sip of water within, let me just grab a sip of water real quick. All right, good stuff. Now, what I'm going to do, folks, is I'm going to go ahead and back this up. All right, I'm going to back this market up, and I want to just quickly show you something. Now, do me a favor. Does everybody see, all right, does everyone see right here where we obviously have an uptrend, correct? Now, does everyone see this? What I'm going to do is I'm going to advance the market forward, and I want everyone to take a look at what I'm about to show you, all right? Now, if we take a look at all this market fluctuation, does everybody see how the market, for instance right here, does everyone notice how the market creates a directional push up towards the north? Does everybody see that? Okay? Now, with that being said, here's what I want you to take a look at. Does everyone see and notice how this candle right here is the 3 a.m. candle? Type in a Y for yes if everyone sees that. All right, 3 a.m. candle. Now, if I move on to the next one, all right, I just keep going forward. Does everybody notice here's another 3 a.m. candle? All right, and once again, the market creates a directional push up towards the north. All right, and if you take a look at the market movement that's happening within that time, and this might, it's a pretty good example, but once again, I like to show you examples where the market's flat throughout the day and then actually spikes at that time. Just kind of keep moving, but moral of the story is I want you all to understand there's a reason why we focus in on that candle, all right, and we basically expect the market to create some pretty serious moves. And you know what? Here's another example. I'm going to show you this one last one before we move on. Okay, everyone see that 3 a.m. and once again you notice that the market creates directional push up towards the north. Now, what I want to go ahead and show you, okay, I want everyone to take a look at this. If we go ahead and measure pips, how many of you can tell me? I want you to look at the top left-hand side of the screen. Who can tell me? All right, how many pips did the market move? Top left-hand side. If you look at the top left, does everyone see the 4 lines of data that appear? All right, the first line where it says 419, the first line is the date, time, and price we got in. The second line is the date, time, price we got out. The third line is how many pips we captured, which says 100. And the fourth line is how many bars. Now, if we're on a 1 hour time frame, do you realize that that means 100 pips in 7 hours, right? 100 pips in 7 hours time. If we take a look at another example, all right, once again, same thing. If we take a look, market moved, let's just take it to right there, 130 pips in a matter of 4 hours, right? So that's $1,320 at a standard lot. So is everyone with me on that? That is why we focus in on the 3 a.m. candle. I think you get it. So let's go ahead and apply strategy. Let's get into it. And as I go ahead and do this, folks, my biggest thing that I want you to understand is if you like what you see today, all right, I'm going to tell you right now that we're going to be able to actually get you involved in multiple live sessions, get you all these different, education and analyst on demand, and I'll explain what that is, but for literally the cost of a lunch, okay, if it's something that you really like. So as we advance the market forward, I also want to let you know that the strategy I'm going to be applying right now is actually going to be, we're going to repeat the process. It's the same thing over and over and over again. All right? Is everybody with me regarding that? Same thing over and over and over again. So what I want to do, okay, is let's just go ahead. I'm going to back this up, and I want to go ahead and just find a 3 a.m. candle. Now, does everybody agree that this is the 3 a.m. candle? Everyone see that? All right. Now, next thing I'm going to do, once you identify that that's the 3 a.m. candle, I'm going to go ahead and place a little green or a little orange arrow right there to signify 3 a.m. to make sure that we're on point. Okay. Now, first two things we're going to do. All right. Once we identify the 3 a.m. candle, we're going to do these two things every single time. It's never going to change. Okay. First thing we're going to do is we're going to place a horizontal line above the candlestick wick, and we are going to call this our entry buy. Okay. So we're going to move this up 10 pips right there. Okay, that has moved up 10 pips. And once again, that is never going to change. That is going to be our entry buy. Our entry buy is going to be plus 10 pips above the high. Make sense? Above the 3 a.m. wick high. Every single time, never going to change. Then we're going to plot a second horizontal line, and that is going to be called our entry sell. Our entry sell is going to be minus 5 pips below the low, okay? Below the 3 a.m. wick low. So once again, never going to change. Same thing every single time. Now I'm going to grab my horizontal line. We're going to go ahead and plot that accordingly. Minus 5 pips. Hey, there. Okay. So is everyone with me so far? We got an entry buy and we have an entry sell. Now, please keep in mind, folks, okay, that we are not in the market buying or selling yet. These are nothing more than pending orders, okay? We identify the 3 a.m. candle. We set ourselves up. We are now simply waiting for the market to take its course until it crosses into either my buy zone or my sell zone. The moment the market crosses into my buy zone or my sell zone is going to be the moment that I now know if I'm going to buy or sell. Now, to give you one that's a little bit more definite, did we cross into the entry buy or entry sell? Who can tell me? Okay, we are into the entry sell, correct? So now that we're into the entry sell, I want you to take a good look at this, folks. We are now looking to short the market. Now, the moment that we're looking to short the market, okay, we need to, first and foremost, we're going to set up our stop, all right? Where does our stop go? Well, our stop is going to be placed plus 5 pips, all right, plus 5 pips above the 3 a.m. wick high. So I'm going to place my stop accordingly, okay, plus 5 pips above. We're going to change, we're going to delete our entry buy. Our entry buy is now going to be our stop. All right, once again, that is going to be plus 5 pips above the 3 a.m. wick high. Okay, everybody good on that? So we're going to go ahead and we're going to change this color to red. Now, once I change that to red, what's next? Well, we now know that we're looking to sell, right? So understand that my entry sell is now was a pending order. It's now going to be an actual order. It's now going to go from a sell, right, to an actual market sell. So once again, there's a big difference because we went from pending order to an actual order. So with that being said, let's go ahead and ask ourselves how many pips do we want to go after. Well, first thing I'm going to do is I'm going to measure my risk. How many of you can tell me how many pips are we risking on this trade? If I go ahead and measure, who can tell me how many pips do you see on the top left-hand side? All right. Does everybody see 61 pips? Okay. Now, I am going to tell you something real quick, okay? When it comes to equity management and when it comes to setting yourself up, you can personally, all right, because like I said, I personally like to have your risk to reward ratio is obviously going to be huge. And a lot of you might only focus in on 2 to 1 like Jim maybe, or 3 to 1, 4 to 1. I'm not sure what it is for you, but I do want you to know that there's a reason why we do what we do specifically on this actual strategy. But I'm going to tell you right now, I do not do a 1-to-1 on every trade that I place on every concept. Does that make sense? I just want to make sure that you guys are fully aware of that. But as I advance the market forward, if we're risking 61 pips, I'm going to go ahead and let you know that, okay, now that our risk is 61 pips, I want to personally go after 61 pips. But as I advance the market forward, I want you all to take a look, all right? I want you all to take a look at something real quickly here as I advance the market forward. Now, as the market moves down, let me ask you a question. Do you notice how the market did, in fact, move in a downward manner? Yes or no? And if we go ahead and quickly, okay, measure this, and as a matter of fact, let me just make this a little bit easier for everyone. I'm just going to measure from here to here. All right, I'm going to drop it down 61 pips. That's going to bring me to the 11461. All right, so once again, I dropped this down, all right, exactly 61 pips. So now that is obviously, what was that going to be? That was going to be our limit, correct? So now that we have our risk, we had our limit, let me ask you, did the market fulfill our target, yes or no? Okay, type in a Y for yes if the market did in fact fulfill our target right there. And once again, we now are up 61 pips. Now, as I go ahead and jot that down, plus 61 pips, okay, here's the thing. That right there, I'm not going to get into broker fees, spreads, or anything like that. That's just a lot of detail. It's going to take up a lot of time. It just depends on your broker. But at a standard lot, for the most part, that's going to equate to $610 profit. All right, and how many hours did it take? 1, 2, 3, 4, 5. So in 5 hours, that's what we were able to accomplish. Now, next thing, once you actually fulfill the trade, once you're done, you are absolutely done for the day with that specific trade, okay? So what are we going to do now? Well, we are going to go ahead and advance the market forward, because what are we doing? We're simply waiting for the next 3 a.m. candle. Now, do you all notice how the market is starting to fluctuate? Type in a Y for yes if you notice how the market's now starting to kind of go up and down, and sideways. So I'm telling you, there's a reason why the market does what it does. But as I advance the market forward, I'm simply going to advance the market forward until we get to the next 3 a.m. candle. All right, and oops, we kind of jumped the gun there. There it is. All right, now, once we go ahead and finish up our first trade, I am now going to move this to our new 3 a.m. candle, and we're going to repeat the process, okay? Now, as we go ahead and repeat this process, I'd like to see how many of you really understand this. So if you can, let me know what I'm supposed to do here as we move along. And I just want to kind of see who's with it, who gets it. Now, as we go ahead and identify our 3 a.m. candle, once again, we're going to confirm that. There it is. We're going to set ourselves up. I'm not going to type out everything because of the sake of time. Everyone hopefully is okay with that. But what I'm going to do is I'm going to place a horizontal line plus 10 pips above. Remember that? So plus 10 pips above. We're going to place another minus 5 pips below. Okay, right there. And if we go ahead and take our ruler tool, let's just quickly measure to confirm. Okay, we are up 10 pips and down 5 pips. So once again, these are nothing more than pending orders, right? So if we go ahead and type these out, we have an entry buy. Remember that? It's plus 10 pips above. And then we have, once again, I'm going to type it out one last time, and we have our entry sell, which is minus 5 pips below the low. Now, we're going to advance the market forward. We're going to see what the market does. As the market advances forward, did the market, once again, folks, cross into our entry buy or our entry sell? Well, it crossed into our entry buy. So we now know that we are looking to what? We are looking to buy the market, correct? So watch this, ready? Because it's a little bit different now, and the only thing that's different is your stop. When we sold, we placed the stop plus 5 pips above the 3 a.m. candle, correct? Well, if we're buying, we're going to place the stop at the 3 a.m. wick low, okay? So once again, this is now going to be our stop, which is going to be at the 3 a.m. wick low. We're going to change that to red. And once we do that, we are also going to, okay, we're also going to go ahead and take our entry buy. What does our entry buy become? Our entry buy now becomes our, good job Michael, Jose, Anthony, and everyone else responding to that, now becomes our market buy. So once we have our actual market buy right there, let's go ahead and take a look. How many of you can tell me how many pips are we risking on this? Okay, who can type that in for me? All right, we are risking 45 pips, correct? Yes, we're risking 45 pips. So our risk is 45 pips. Now, who can tell me if our risk is 45 pips, how many pips are we going after? Okay, good stuff. Jose got it. Okay, everyone should be typing in 50 because remember, if our risk is anything less than 50, we're going after 50 at the minimum. All right. So let's go ahead and measure 50 pips, and let's go ahead and drop this down a little bit because it's going to probably bring us above that, and that'll certainly take us to right there. All right. So let me go ahead and grab a horizontal line. I'm going to plot that. We're going to change this to green because once again we now have our limit. Our limit is going to be set right there, folks, and once again we are looking to go after 50 pips potential, all right? as I advance the market forward, remember folks, we are now set up. But before I do this, type in a Y for yes if you're with me so far. How many of you are with me so far? You understand this. Obviously, I'm sure you have questions, but how many of you are starting to understand and see how it's a very simple concept? You do it a few times yourself, and you're going to literally know how to apply it over and over and over again. It's a very, very simple method. Now, as we advance the market forward, did that next candlestick wick fulfill the target? Yes or no? Everybody see that? All right. Not only did the wick hit it, but did that next candle actually not only fulfill our target, but blow past it, right? So there it is. Once again, 3 a.m. candle. 1, 2, 3, 4 hours later, we're in and out. But since our entry, 1, 2 hours later, we fulfill the target. So once again, that 50 pip potential now actually becomes a reward, which we're going to list it out as $500 US profit at a standard lot, and we did that in, let's just call it, since our entry in 2 hours, okay? Now, if we take those 2 days of trades, all right, and we go ahead and take a look at what we were able to accomplish, how many of you would be pretty darn excited if you were able to place these 2 trades, 2 different mornings, okay? And if you just add this up quickly, and you end up looking at and seeing 500 plus 610, would you be okay with $1,110, call it $1,000 in a 2-day time frame? And do you notice how you literally got in and got out within a split second? And am I telling you that every morning, every pound cross is going to win? No. If anybody tells you that, oh, you know, you're never going to lose and I'm going to teach you how to never lose, run for the hills, right? And okay, I'm sorry to say that, but it's a fact. Now, what is also a fact is having proper equity management and protecting yourself. But what I will tell you is this: if you like this strategy, folks, I'm going to tell you, hey, Reed, can you chat me, my friend, how many minutes I have? I haven't even looked at the time, and I'm just hoping I don't like get this message where I have like 1 minute left. I might have to move on like right now. All right, if you just let me know, my friend, that'd be great. Okay, so once again, if you like this concept and this strategy, here's what I want you to understand, folks. This is not the only thing that you're going to learn. This is not the only strategy that you're going to apply, the only one that you're going to learn. And the reason I tell you that is this: there's things that we're going to teach you. When I say things, okay, I mean strategies. For instance, if you take a look, all right, let me just go ahead and delete all this. How many of you notice that obviously, if you take a look at this uptrend, how many of you agree that the market was in fact in an uptrend? Okay, does everybody agree that the market was in fact forming higher highs and higher lows? Everybody see that? All right, now, if I go ahead and kind of back this up, let's just go to a really clean trend, okay? Does everyone see this uptrend right here? I'm going to grab my auto Fibonacci tools. Does everybody agree with me that this is the beginning of the trend? Yes or no? Take a look right here. Everybody agree? That's the beginning of the trend? All right. I'm going to grab my auto Fibonacci tools. I'm going to plot them at the beginning of the trend. Do you notice how my auto Fibonacci tools immediately appear? So if you're wondering, what the heck is that? I don't even know what Fibonacci's are. Understand, folks, that there are ways to take advantage of trends up and down, multiple concepts, multiple ways, and that, what I just showed you was what I decided to choose, what I chose to show you and teach you in the little time that we have. But when it comes to trend direction, and when it comes to market movements, and when it comes to, you know, analyzing the market, there are so many things that I could have, you know, shown you today, but unfortunately, because of the time, you can only really pick 1 or 2 things. But as we move along, how many of you really kind of are starting to understand and see the potential in the Forex market and how much, you know, how much is available to you, okay? And so what I'm going to do right now is I'm going to go ahead and kind of advance forward. I am going to come back to the charts if I have some time. The last thing I want is to run out of time, okay? So I don't want to rush, and then, you know, oops, I ran out of time. Let me get through something real quick, and then if I have a few minutes, I'm going to answer your questions. I'm going to come back and show you some more examples and some more analysis as well. But how many of you honestly, you know, kind of see yourself trading and see yourself doing this and learning, and, you know, hopefully you have a little bit of a different perspective on the market. But question is, what do you want, and you know, what do you want to do to learn it? So with that, folks, let me go ahead and kind of move on a little bit. And what I want you to understand is this. I mentioned it earlier, I'm going to say it again, okay, is that when it comes to, okay, when I have to check, Robert, okay, my friend? when it comes to actually seeing success, when it comes to seeing backtest, you're probably wondering, well, Mike, you know, how many times did the pound win, really, right? In the last 12 months, how many wins have you had? And I'm going to tell you this. If you really want results, you want us to show you some different backtests and some different predictabilities, we'll show it to you. For instance, here's Peter Cook. You said, hey, I did Josh's pound Aussie, took me to the limit just as he said. I didn't move my stop or fiddle with the plan. I just bought, set my stop limit, left it alone. Analysis was spot on. Good for 80 pips. Now, for those of you, like I believe it was Jim, who was saying, well, you know what, I don't know if I want to really trade a one-to-one. How many of you would like to learn how to take advantage of that same strategy but apply it to where you actually have a greater risk to reward? How many of you would like, you know, to learn different concepts with that? Because if you think I just taught you the entire London breakout, I'm going to tell you there's different concepts to it. But as we move along, the biggest thing I want you to understand is that you are not just going to learn that one strategy, okay? You're going to learn multiple strategies that are going to literally allow you to see some incredible results, some incredible things. If you take a look at some of the masterminds, once again, one of them is Josh, for example. Okay, he is literally one of the best in the industry. You know, he literally, as a matter of fact, folks, some of you might be aware of this, he literally captured 10,000 pips in 24 hours. Literally, Thursday. We were just informed of it. Pretty wild, right? But once again, this, if you go, I'll send you some links if you want to go to our Facebook and check out MTI, my page, Josh's page. Just scroll down and look at what our students are saying. They post the results all the time. It is mind-blowing, okay, literally. So here's the deal. Let me go ahead and explain what we're doing for you today, and I'm going to go ahead and run through what you're going to be getting, but let me just kind of sum it up in a nutshell. You're going to be getting, okay, 8 live market sessions within a 30-day time frame. You're going to get Analyst on-demand service where every day you can plug into a professional trader where they are literally telling you what to trade day in and day out, okay, 24 hours a day. Run any trade by them so that they can answer it for you if you want some guidance, if you want some help on that, and so much more that I'll get into. But let me just show you what we're doing. Typically, the 30-day, the membership to become part of this exclusive club in a 30-day time frame is $297. But what we're doing for all of you today is we're going to allow you to get involved right now for 27 bucks. That's it. Literally $27. The cost of a meal for 2. As a matter of fact, if you want to actually continue on with that, it's just $87 every month thereafter. And like I said before, folks, the reason you have nothing to lose is simply because we're even giving you a 30-day money-back guarantee. I've never seen a risk-free guarantee for something like 27 bucks, but believe it or not, we're doing that for you if that's something that you you know, that you want to take advantage of. And I'm going to get into the details. Let me go ahead and ask Reed. Reed, can you send the link, my friend, if you're there? All right, if you could just quickly send the link out to everyone. And if everyone doesn't mind, I'm going to go ahead and I'm going to actually grab it myself. All right. Okay, there it is. Never mind. All right, thanks, Reed. So does everyone see that? If everyone can please just click that for me and just type in a Y for yes if the link is pulling up accordingly. All right, just simply let me know, please, that there are certainly no issues. Is the promotion pulling up as it should? And are there any issues? Okay, everyone good? All right, good deal. So let me go ahead and kind of, you know, advance this forward. And as we do that, I'm going to remind you that we're going to be giving everybody 100% 30-day money-back guarantee. I mean, 27 bucks, you have nothing to lose, literally, okay? And you have 100% risk-free guarantee for 30 days. Now, you're going to get 8 live market online Forex sessions per month with 2 of MTI's analysts. You're going to learn. You're going to be able to mimic their trades, learn directly from the pros, learn about their analysis, ask them any questions in live Q&A sessions, discover multiple, not just the one I showed you, multiple strategies, folks, to accelerate your trading account. How many of you would find value in the fact that you could, how many of you understand the value and benefit from this if you were even able to simply apply it, take advantage of it, and use it towards a demo account? How many of you would honestly find value in a demo account for 27 bucks? You know what I mean? To actually get an actual first-hand real view of what it could be like for you and apply the strategies for the rest of your life. One Forex market preview video each week. These are going to include the analysis that Josh goes over, the possible scenarios they're going to be taken advantage of. It will also include an email reminder each week containing the market preview video. You're also going to get recorded replays and ongoing access. So if for whatever reason you miss it, you came late, doesn't matter, it will be posted. You will be able to access it and take advantage of it. Now, the 4 bonuses that, literally 4 bonuses for the 27 bucks you're also going to get is bonus 1 is a 30-day free of MTI's Analyst VIP Analyst on Demand service. Now, if you're not really sure what that is, all right, let me just go ahead and show this to you. This is the Analyst on Demand where you can actually plug in, okay, to this live portal every single day, 24 hours a day, folks. You have our professional analysts telling you what currencies they're trading, how many pips you can expect to make for the day. You can even have live Q&A sessions where you can literally talk to them and ask them whatever questions you may have. And literally, okay, the whole 9 yards, everything that you can even imagine and comprehend, it's all going to be there for you and available, all right? But that's literally one of the bonuses, okay? The next thing is the introduction to currency trading. So there's going to be 4 Forex lessons by us, all right, covering some of the very fundamental basics of Forex trading. You're going to get a profit plan consultation call. And then lastly, bonus 4 is 10 Keys to Successful Forex Trading ebook by Jared Martinez, or known as the FX Chief. So once again, folks, you know, that's the deal. 100% 30-day money-back guarantee, 27 bucks. You got nothing to lose. I got about 1 more minute. And so at this time, let me ask all of you to do me a favor. Type in a Y for yes or the word me if you are currently taking advantage of this and you are going to use it risk-free for 30 days. Okay, if you're taking advantage of it, you're going to be part of the club. I just want to quickly, you know, Fred, thank you, see who, and I just want to congratulate you real quick, all right? And you don't, you know, just if you are, you can type in yes. And I got to wrap up, but let me just congratulate some of the following individuals. Bob, congrats. Richard, Flanagan, awesome. Jim, good stuff. Wendy says just joined. Noah says signing up now. Awesome. Nina, thank you. John, thank you. Bob, Cindy, Sarah, appreciate that. Ron, Britt, good stuff. And so, listen, there's more people typing in yes than I have time for. Reed's kicking me off right now. So thanks, Reed. But anyways, I will pull up the actual link real quick. And you're very welcome, Fred. You're very welcome, buddy. Okay. Waclaw, Jesse, Tron. My gosh, there's a ton of you. So cool. All right. So with that, I'm done. Reed, you can come back on, but if you could just let me pull this up real quick. This is it, guys. All right. This is the link that you should see. Live market trading. And I know I got started like 3 minutes behind, so I do apologize. But there it is. All right. All the details, the breakdown of what I covered. In case you're like, wait, what are we going to get again? Just click the link. It's all there for you. And it's very easy to take action and take advantage of it, okay? And the risk-free guarantee, all of it's listed, posted, and that's the deal, okay? So congratulations to everyone taking action. I apologize if I didn't call you out. I can't wait to see you part of the club. Reed, if you want to come back on, my friend, and everyone, look in the chat box. I'm going to send you 2 links. One link will be the link to the promotion. I recommend you click it, folks, because I just don't want you to miss out on it, all right? At least have it there. But it is a one-time today promotion, so that's that, and I will send you a link to our Facebook if you want to check us out and see what our students are saying. Thank you very much.